Hey everybody, and welcome to And that tune means it's time for Andrew Giovinazzi, that's me, to start our morning volatility report. Before we do that, we have something new. For all the people that read our daily vol report, we have a boot camp that is starting December 10th. So we just finished our November class, and we have our December class starting up for 4 days worth of instruction. The boot camp is we try to essentially get as much in 6 hours as we possibly can, with opportunity for conversation, email questions, all that kind of stuff. It's a good chance to get in and see what Option Pit is all about. So it's just like a taste. But you do learn an awful lot of stuff. They're the two handsome guys that are going to be running it, Mark and Andrew, me being Andrew. All of the stuff we're going to talk about, using options, short options anyway, to generate some money, understand how the wheel trade works, basically selling puts, helping increase profitability of directional trades, what delta neutral spreading is all about, and managing trades that reduce risk. Okay. All right, enroll now and you can receive a little access inside our pro chat room for a while. All right, pretty good deal. Once we get to our 200 person limit, the deal will be gone. All right. So to the markets today. Let's see how I got the blog yesterday. There we go. Buy the room and sell the BABA. Let's see today what we got for old Alibaba. It seems like that stock can never go up. It's a little lower today. Little lower. Good. I'm right for 41 cents. Anyway, downside flies. Maybe hedge with an upside call in here. But the vol still looks like it's coming in. Stock's a little lower. VIX a little higher. I even wrote something up for the street about a long time spread in SPX. We had talked about it with some of our in our chat room, some double calendars and things like that. Volatility getting into the 8 handle on Monday and Tuesday morning, very, very cheap. I know there's a holiday here, which is why this is cheaper, but that was still pretty darn cheap. That's all I'm going to say there. Pretty darn cheap volatility. Okay. The market is pulling back a little bit on, on what? It uses more Ukraine stuff, more Europe stuff. I mean, ultimately, it's no different news really than we had that essentially caused the market to tank in mid-October. But the reality is, I think the underpin is there's no QE. QE is done. The U.S. is going to raise rates, and the equity market is going to become a little more volatile because of it. I think what that means is we could have periods of real low vol, and then I think we'll have periods of more elevated vol because some of all these little issues that percolate from overseas, there's no what we'll call the quick central bank fix anymore. Okay. And that's what we got. What looks interesting? I like to look at trades, and again, I like to look at some gold trades again. I like to look at some euro trades again. Setting up for these products are still moving around quite a bit. Okay, you still have pretty high vol in here. Go look at charts, gold. Again, it's just things have not, whatever's going on in this product, none of this has really ended. It's come off some of it, right, because we're more range bound, but it's still here with us. So I think the movement from at least that point of view it's not totally over yet. Okay. So trades I like, things that get you some kind of long vega. I like the time spreads, like the double calendars where appropriate. We did come up with a couple of diagonal spreads in VXX, essentially stuff that will perform okay if the market, if volatility really flies. But again, it's like it sort of flies quick and then sort of dies, and then the market for vol slowly goes up again, which is kind of what we're seeing. Okay. All right, we might get little, let's just look here, like quick chart for VIX. And let's take a look here. Actually, let's do like that. A tick chart is probably a little better for this. Let me get that one up so you can see what I'm talking about. Let's go VIX and a 5-day chart. And it's doing one of those, let's see, if you go look at a 5-day chart here. Right. You know, the vol kind of pops and dies, you know, and then you have a little pop and it dies, right? And we're going to have a little pop again this morning. It's going to die, right? But we're not making those, you know, we're not making those lows again, right? This was very, very low, right? So it's, yeah, you get a little move and the vol dies, a little move, vol dies, right? Because we just came off the change in vol expectations from the Bank of Japan, essentially. And it's just, you got this sort of slow pattern. So, you know, trades like time spreads, diagonals, things like that, we basically have two legs that limit your sort of directional exposure, probably are going to work a little better in here. Vol in general, let's say if you look at a product like VXX, boop, boop. Okay, it's starting to get down to, you know, it's not the lows. Remember these crazy lows for volatility? It's bending up just a little bit now. Okay, it's not these crazy lows that we saw for vol. Okay, it's kind of in the mid-range. So again, more spreads, things like that. Little bit of nervousness is creeping back into the vol products after spiking down at the beginning of the week. So again, keep an eye on that and see if the vol can keep going up. If we get a little more nervous, oil going a little lower, all those oil stocks going with it, right? Those are the kind of things that can kind of shake the market. But, you know, I think a 12 VIX this week is going to be a stretch for it to hit, right? As we keep sort of bouncing around. But even where we are today, we couldn't hold that early morning crash. So if we see this VIX drop again to unchanged, don't be surprised if the market is, surprise, up once again. All right, everybody, I'll see you in the chat. Today we had our platinum class this morning, and I will talk to you all later. Bye-bye.